Awesome, so you guys have been seeing some super cool real trades go down, which is so fun. And hopefully now you see kind of the insane power of what we're actually learning here, which I think is really cool. Definitely some awesome opportunity. And just a lot of really cool trades that, I mean, they're like literally thousands of these every single month, right? And so that's the cool thing, is that you just kind of find the ones that are the most volatile, the ones that are going to produce the most upside, and you stick with those, and I mean, you're golden. You're going to crush it. So really cool stuff. What I want to transition into now is something that's really key, because like you've got to kind of understand this to make everything else work. You know, when they put cement between the bricks, that's kind of what I think this is. This is sort of the cement between the bricks. It's going to really allow you to sort of clump everything that we're learning together in an effective way so that it lasts a really long time, and that it's very strong, very resilient, and it works really well. So with that said, let's go over to the computer, and I want to go over Stephanie's 5 rules that she developed kind of working on Wall Street for a couple of years, because these are like gold. So super cool stuff. Let's go over, let's make it happen. So rule number 1 is pretty foundational. This one is huge, and I never really understood this one until I read this, and I realized how important it was, and I like was always talking about it, but I never understood it until I saw it on paper, and I was like, wow, that's huge. And here's the rule, okay? You only look at candle patterns, right? Candlesticks, whatever, you've got like all the candlestick patterns that are in night and noon. Only look at candle patterns that are found, or that are formed, and here's the key right here, formed on high volume, right? You've got to have high volume, because that volume is literally what makes it a real setup. Remember, we talked earlier about these guys that would literally just make fake candlestick setups on low volume, because you can manipulate the price, just manipulating supply and demand, and buying or selling a bunch and spending a little bit of money to make it happen. Like, you've got to make sure that you have quality high volume in these candles, whether they're 5-minute candles or whether they're daily candles. It doesn't matter. If you see like empty candles that have no volume, like that's really bad. So you want to make sure that in kind of all situations possible, you have a ton of volume on those candles that actually supports the underlying movement. That's really critical. That's super key. And it's something that you'll sort of understand as you move through this process, is that you definitely want to have really great volume on your candles, and great volume your setups, especially if you're basing a trade off a candlestick setup. You want to make sure that candle has a lot of volume. And then she talks a little bit about this idea of like weekly candles having, you know, being much more powerful than daily candles. And similarly, you know, weekly, monthly candles are really powerful. So any candlestick setup that you see in the weekly is gonna, or that you see in the daily, is really gonna matter a lot more than stuff you see in like a 1-minute chart or anything like that. Especially with your swing trades, what you really want to focus on are sort of weekly candles, monthly candles, sometimes daily candles. But these weekly candles are really the gold mine right here, because these weekly candles, they give you solid 5-month trades, 4-month trades, 2-month trades, 3-month trades, sometimes 1-month trades, and they'll give you a lot of upside with really solid setups and pretty low downside, which is really sweet. And then obviously as you transition into more active stuff and you're trading based off of these dark pools, that's when you would start to look more at these daily candles, because those are going to be shorter trades, usually shorter trades with some quicker price movement. So that's where you would kind of look at daily candles. Over like the 1-minute candle, you're not really going to have a great swing trade based off that. It's really based, just like the strength just increases as you increase the time frame, right? So more time is more strength. So just a foundational concept there. That is really critical, really key, and especially for larger companies, you're definitely going to look at the bigger candles and look at the overarching candles as you enter these trades, because you want to sort of understand where the trend's going. But most significantly, like, you got to understand that these are kind of the powerhouse movers that can determine what actually happens on the daily chart, or what actually happens in the 1-minute chart, because these are really just reflections of the overarching pattern that's being defined buy these longer term investments, right? Like you don't want to look so close into a brick wall that you're focusing on the little tiny bricks and the specks when in reality there's like a freaking like giant wrecking ball coming and about to smash the entire wall down in your face. Like if you don't take a minute to step back and look at what's actually happening and you get too focused on the very minute details, sometimes you can get screwed and you can get screwed over hard. And so it's important to look at the whole picture, the whole stock, and understand what's really going on, especially with swing trades, because you know, if a company goes bankrupt, it doesn't matter how good your setup was, you're screwed. And so obviously that doesn't happen very often, but you definitely want to understand what's going on in the medium term and the long term as you go into these short, medium term swing trades. You want to make sure it's a reliable company. Obviously, this doesn't matter at all for 90-day investing because you're selling on the same day. But anything where you're holding it overnight or you're holding it for more than just like a couple of hours, you definitely want to make sure that you're investing in a quality company. And the way you do that is by looking at the long-term candlestick trends that are established on high volume. Rule number 2. This is pretty huge. You guys kind of know this. You've been going through 90 Noon, you've been going through this content. You understand what hammer candles are. Basically, what she's saying here is don't buy inverted hammer candles, which is pretty basic. I mean, that's like the foundation, right? Like if you see this candle and it's like super massive inverted hammer candle, you know, you can kind of tell that if it's been going up a whole bunch, it's probably going to go down a whole bunch. And it's just the foundation, just basic stuff. And what's crazy, you'll see this a lot because people at the end of the day, you know, the stock will close. A lot of people will come in at the end of the day and sell really hard. So the price will try to go up, but it'll get sold off really hard. And so you definitely want to make sure that you don't buy inverted hammer candles. Really cool foundation here. And it matters mostly, again, at the end of the trading day, right? So you've got your whole trading day right here from 9:30 to 4. And it's just this last little sliver of time that you want to focus on and make sure that everything looks solid here. And I have a lot of my orders that get filled at like 355 because people freak out and sell, and they sell at stupidly low prices, and I get really good prices, which is kind of cool. But yeah, definitely a huge concept here to understand that there's definitely a lot more volatility at the end of the day. And again, you just don't want to buy inverted hammer candles because those are, you know, reversal indicators and downside. A lot of what she talks about, again, is this idea of buying at the end of the day and selling sort of at the beginning of the next day, which is a cool like little pattern trick that you can use. And we'll get a lot deeper into that as you sort of progress through this education. But definitely some cool strategies with that have historically, well, if you look at like buying and holding the S&P versus buying the S&P at 4 and then selling it at 9:30 every day and just having that aftermarket movement, you can actually like outperform the market by just doing that, which is pretty cool. Definitely a cool little overarching concept there, and a bigger one that we'll look at sort of longer term with the idea of pattern recognition, and then also ways to scale that so it's not just like a little percent gain here and there, but it's actually like a sizable gain, which is the goal, right? Is to have that big growth and just crush it. So you can kind of see that here, which is kind of cool. Rule number 3. Remember this key concept that the stocks are fueled by volume. Volume is the gasoline. And so if you want to get in a position, you want to make sure there are a lot of people getting in that position. And it's closing at a new high, right? It's closing strong with quality volume. Same thing if you're trying to short, right? You want to make sure that it's closing down with quality volume. You want to make sure there's a lot of people there so that everyone's kind of pushing it over the edge, making it go quickly and making it go really fast. So that's kind of the core of rule 3. You don't want to be the only freaking person on the planet who owns this stock. You want to make sure that there is above average volume and above average attention on it, and above average number of investors getting into it, because the more investors that are in the stock, the more volatile it's going to be, the more quickly those shares are going to exchange hands, and the faster that the price is going to move, and you're going to be able to make money off it, which is pretty foundational, pretty core concept there. Rule number 4, and this one's pretty sweet. If you have a stock that looks like a freaking hammer candle, don't short a hammer candle. It's pretty basic stuff. I mean, I don't know what to tell you. If it's going down, and then there's a hammer candle, it shows that everyone's freaking buying because buyers are coming in at the end of the day. And so probably gonna freaking just crush it after that. So it's again, same thing here with the hammer candle. Just follow your hammer candle patterns and you'll be you'll be solid with these strategies. But really the core here, and the thing I want you to take away from this, is you're applying this not just to like the entire day, but really specifically to like the last 5 minutes. Because the last 5 minutes, you'll have a lot of people that panic, a lot of people that sell, a lot of people that buy. And so you kind of want to be careful. Most, I don't usually trade last 5 minutes. Usually I just trade 9 to noon, and it works really, really, really well. So that's sort of the core, but you definitely want to understand if you're doing this idea of like overnight swing trade, like if you get filled in those last 5 minutes, you want to make sure that you get filled, you know, in regards to the way the hammer candles move. So if the hammer candle says that it's going to go down, you want to make sure that you're shorting. And similarly, if the hammer candle says it's going to go up, then you want to make sure that you're buying. So that's sort of the core foundation here. And then the last one here is super, super, super cool, and it kind of goes into this idea of hammer candles much more. It's rule number 5. Rule number 5. Short a stock only if the stock closes on above volume. So remember, you always need volume to back up your trades, even if it's a short trade. You want to make sure that the movement is valid. You want to make sure that the movement is strong, and you want to make sure that the movement has high volatility, which leads to really, really, really big upside. Because that's the whole goal, right? It's to have that upside, and that upside comes from volatility. That upside comes from people in the marketplace, high volume, above average volume, leading to that big movement. So you want to see that with your investment. You want to see above average volume that leads to really, really, really strong, fundamental, foundational growth. And then kind of combine that with hammer candles, combine that with your knowledge of, you know, technical analysis, and you'll do really well. So some really, really great rules here. And really the foundation of all these rules, and you see it in every single one of them, is you want to see high volume. You see it, every single one of these are talking about volume. And so it's really important that you actually have that volume to support the movement of any kind of investment you're making, because everything comes down to having the market actually there to support you, right? And to make it a real valid movement. And you combine that with dark pool prints, which are really just massive, massive, massive injections of volume. And you're looking at really, really, really great ways to make a stock move super quickly, since it's really all just based on volume. So really, really cool foundational core concepts here. And just really, really cool, because like this stuff scales super, super, super well. Like you understand this, and you can scale this. You know, hammer candles, these happen on daily charts, these happen on 5-minute charts. It doesn't matter. These happen on 15-minute charts. Like they happen on monthly charts. I saw these happen on Beyond Meat when they peaked, and dude, oh my god, the calls, the puts on those like sextuple. It was amazing, and it's just all based on this idea that like there was a maximum amount of volume at the exact same time when there was the maximum amount of upside. And so if you can correlate max volume with max upside, can make max upside. It's all just about following that volume. See, some of the biggest reversals in any company are when there's a lot of volume at the bottom. Same thing, any reversal in any company is when there's a lot of volume at the top, a lot of people getting out, a lot of dark pool sellers selling. That's a lot of volume getting injected, and that's when you start to see these reversal patterns come up. So really cool foundational stuff here that is just really, really, really applicable. So make sure that you always, always, always lubricate your trades with lots and lots and lots of volume. Super cool stuff, guys. Thank you so much, and sort of use dark pool trades as a way to do that in a faster way. So yeah, but we got a ton of value from this module. Go out there, apply, absolutely crush it. And I will see you in the next module. Thank you. Bye.